Hello everyone, welcome back to my channel. Today we have another episode of Monday Market Update, which is we talking about the real estate market in Phoenix nowadays. And today is the week of July 11th, and we are going to look at the index, the demand and the supply, and answer a lot of questions for a lot of people why there is a lot of price reduction now on the market, right? So let's take a look at what we have. Let me turn off this one, and I'm gonna share with you first the very first chart that I want to talk about. And by the way, again, as always, all the information that I talk to, excuse me, in this video, all the chart is provided by Comfort Associates, which is a very reliable real estate data company in Phoenix, Arizona, right? So this chart right here is called the Comfort Demand Index and Comfort Supply Index, okay? The index meaning these are the number that quantified by Comfort Associate. The red line is the demand, and the blue one is the supply. Okay, this is show you the supply and the demand saw index from around 2001 to 2022. Okay, around based on historical measurements, they come to an agreement that they come to a suggestion that index from 90 to 110 is actually normal. Okay, so if the index of the demand line is around this yellow band right here, it is actually in a normal condition. Okay, if it is supply right here, the blue line is way below 100 points. They are in a critical abnormal condition. Right. So this is a high level so that you can understand what the chart means before I go into the next slide. The reason why I want to bring this up is that right now, as you know, we have a dip in the demand, right? The dip in the demand happening right around April of 2022, actually, when all the real estate interest rate, right, when the mortgage interest rate is actually below the going higher, right? When the Fed increased the interest rate, so it start all the trend. If it is before, it is a little bit above normal because of interest rate is higher. Now it's actually going down, and there is a nice trend that we actually have a lower demand index because the interest rate is so high right now, and not a lot of people can qualify for the loan, and therefore the demand is low, right? Now, this is actually not the first time we see the dip in here, as you see here, right around 2022. And this is right around when the COVID started in the US, right? When everyone has to stay home, and that happening right here, right now is about the same. Okay, but it goes back up very easily because the interest rate is still low, and plus that people staying home and they don't know what to do, so they just go shopping for houses. All right, so that's the reason why it's bring back up to above, a little bit above normal. Now it is back to normal, and most likely it's going to be continue going down according to this trend right here. Right. So the first question that I have for you, if you're interested in answering, is as answering in the comment section below. How soon the demand goes back up in this situation, right? We know that it's only take couple weeks, 2 weeks for the drop in the demand back in when COVID started happening. It goes back up, but how soon? How soon this trend gonna goes back up? What is your estimate on that? What is your prediction on that, right? So that's the first question that I have for you. Now, coming to this right here, talking about a supply, right? This is actually the first time we see a high increase of supply for a very long time. We're talking about 2013, right? Right here is a increased number of supply. Of course, we do have some smaller increased number of supply along the line right here, but it's not as substantial as 2013 and now, because it's lasting. It's very fast, as you see here in 2022. The supply index increased very quickly. Okay, increase very quickly, and at the it's fast as well, very quickly and in a very short period of time. Okay, now this increases mainly because the fear, mainly because the new listing, they have a fear of the market crash, and the seller is putting the market and try to sell it as soon as possible before the market crash. Okay, now at the other hand, there's some remaining listings coming from the past, right? Maybe last week, maybe last month, cannot be sold because the demand is low. Right? So it's a cumulation, it's a cumulative, right? It's a total of those two events that make the supply index raising back up, right? So this is actually a not too bad situation because we have a really low supply before, but now we can actually have an increased number of supply. But of course, that doesn't help in the situation. There's no demand, okay? There's no demand at this time. The next chart that I want to show you. So what does it matter to showing, right? Or pricing, right? What does it matter to pricing? Why do I have to look at the index, the demand index, and the listing index? Okay. Now, to answer this question, we have to look at how the chart gonna behave. Okay. Now, to be the only situation right now, right? When we talk about supply and demand index, okay. Right now, the pricing is still high. The only time that the market price gonna change is when the two lines cross each other. All right, when the two lines cross each other. Okay. For example, back in December 2005, we have the cross. Now, of course, there's multiple cross situation from 2001 until now. But I want to talk about 2005 because it is the biggest crash in the real estate market, right, recently. So I want to talk about that so that everyone kind of remember about what the situation is. Okay, so when we talk about how does it matter, why does this demand and the supply matter to pricing? We're looking at, for example, back in 2005, December 2005, right? We had the very first cross right there, right? Now, I'm sorry. Okay, going next. Okay, what happened to the price? Okay, now this is, I'm showing here again December 2005, where the cross between the supply and the demand. The reason why I show is that it's very similar, right? The demand in red is higher than the supply in blue, and we kind of have the increase here, right? It's similar situation that we have currently, and it's crossed, right? It's crossed. The blue line become above the red line, okay? Meaning there's more supply than demand, right? So very similar situation. Now we are going to switch gear a little bit, looking at a different chart, okay? Different chart. This is a year-over-year change in monthly average sale price per square feet. This is, we're looking at year by year, what is the percentage of change, okay, between the median average sale price. Now, all of these charts, the most important key information that we have to memorize is that if it is positive, regardless of how tall the bar is, it's still an increased market, right? Because if it is a positive rate, even though it is only 10%, which is lower than the previous point right here, right? Instead of 20, now with 10, it's still an increase of 10%. That means for every that means $300,000 house is 30,000 increase in purchase price, in sale price the next year, right? So all of these positive is meaning that the sale price increase. The only situation happened in around November or October 2006, okay, when it is negative, meaning that the prices actually goes down. So there's not a lot of instance, if you're looking at here, right, a lot of instance here that the price go positive, go higher and higher every year. That's only a small portion here that's go reduced, okay? So if we are looking at the first time after December 2005. Even though the cross between the supply and the demand happens in December 2005, the first time that the median sale price, the average sale price goes negative, go down is October 2006. October 2006, right? That is the first time it goes negative. October 2006. So we're talking about almost a year time frame before it crosses for the price to go negative. So it is, I'm going to continue showing the price here as well. Now, even though in December 2006, the rate is actually negative, right? It's negative, but the price itself is not goes down yet. So if we're looking at the next chart right here, this is the monthly average sale price, right? We have December 2005 is the first time supply and demand cross each other. October 2006 is when the first time the change year over year goes negative, but the price is still relatively similar to 2005, right? 2005 is about 325, and October 2006 is about the same, 325,000, right? Not until January 2007 is we have the situation that the price goes down around 300 instead, around 300. And of course, December 2008 is the price back to 2001 and 2002 pricing, okay? So long story short, I just want to emphasize is that first of all, when we look at the supply and the demand index chart, right now we don't have the situation where the supply and the demand crossing each other yet. As you see here, let me pull up the chart again so that you can have to visualize here. We don't have the cross situation yet, like in 2005 right here, right? Even if, so I think it's gonna take a couple more months before we do so, right? Maybe toward the end of the year, we're gonna cross it out. Now, even if the supply and the demand continue crossing each other. Now, the same situation, meaning that the interest rate is still high and the supply keep going up, then if only then we're going to have a situation similar here, right? A year from now, probably a year from now, the price is going to start change negatively in 2006, aka, or we can say to 2023, right? We're going to have the case where it goes negative a year later. Then we have to follow like a couple more months to say, hey, we're actually going to go down, all right? We're actually going to go down. And then it's going to be another year before we come back to the 2001 and 2002 price. Now, in this, I just want to use 2001 and 2002 as a base because that is the oldest data that we have, right? So it takes a couple of years, 1 or 2 years, before the price back to the start, right? Now, I'm not saying that we're gonna have the same crash compared to 2005, 6, and 7, and 8, because I don't believe right now the pricing is holding back because mainly interest rate is so high right now, and there's no way for the buyers can be qualified for that. With all the inflation and things like that, the buyers has more things to think about. They have to worry about their food, they have to worry about their gas, they have to worry about their grocery bills, they have to worry about the electric bill. So mortgage is actually the last thing that I can think of, right? So I don't think that we're going to have the same situation like 2005, 2006, where we're going to have the problem lasting for a couple of years. Okay, in 2022 right now, the main problem is interest rate. So as long as we have a way to reduce the interest rate, the demand is going to go back up. Okay, we'll see more on that, but I just want to emphasize is that we are not so bad. We are not in so bad situation, right? A lot of people worry that the market is crashing right now, but of course, first chart right here showing you, right, that we don't have that situation yet. Okay, We have the trend, we have a tendency to go there, but we're not having that happening just yet. Okay, so right now, so a lot of question come up is why then if the price doesn't goes down, why do I see a lot of price reduction, right? Why do I see a lot of price reduction on the market right now? So to be able to answer that question, I can look at this chart for you. Now, this is very complicated chart, and if of course, I recorded all the videos. So if you're confused with any information, just review the recorded video, okay? But I'm gonna go through this. So this chart, this is not the first time I show this chart, but let me remove myself a little bit so that you can see what's going on in here. Okay, so the first two lines that we are going to talk about is the blue line and the green line. This blue two lines indicate what the seller think they can sell the house at, right? How much the house is valued, right? That is what the seller think about a house. The blue is the active list price, and the green is actually the under contract list price, right? So after a certain period of time, if that, for example, if they cannot get the house under contract, they may reduce, and therefore the under contract list price is below the blue line, okay? The other two lines is actually what the actual price of the house, what the actual value of the house, what is the market value of the house, what the actual price that the buyer is willing to pay for. The red one is actually the actual sale price, and the brown is the closed list price. Okay, at which list price that it's go under contract and eventually close, right? That is the brown line. And the red is actual sale price, right? Sometimes it's higher, as you see, from January, February to May, the red line is way above the brown line. Therefore, the sale price, the actual sale price is actually higher than the list price, okay? So you keep that in mind, keep those explanations in mind. And then as you see here, right now, I'm adding more gap between the blue line and the red line. As a reminder, the blue line is actually the active list price. This is the first, this is the average of the active list price per square feet at any moment in time, okay? And the difference between, and the red one is the actual sale price, the average of the actual sale price, how much the house is, okay? As you see, there's a big gap. There's a big gap since January, February, March, and April, okay? Now, it could be happening earlier than that as well. But right now, we only show 6 months period, and we see there's a gap between what the seller thinks the house value is at and what the buyer and the appraisal actually pay for the house, okay? And for this very simple reason, right? The seller have a very strong confidence level, because for the last 2 years, everyone talk about how easy your house gets sold on the market right now, right? It's just as simple as putting on the market. You don't even have to take a nice pictures, and everyone comes to your house, right? So the seller is so confident of putting their house higher than the market value, because they sure that they can get that value or even higher, right? Now the situation changed, okay? Now the situation changed, and the reason why you see a lot of price reduction is because of this right here. This portion right here, this is actually indicate the seller has less confidence of the house value is. And then they have to justify that, and they have the evidence is no longer support their confidence and their level of the house price. Then they have to come down. They have to come down. They have to reduce their price for that reason, so that they get their house sold, right? So you see a lot of price reduction is mainly from the active list price. Okay, it is no way, as you see here, the red line, the actual sale price on average, it is about the same. It doesn't change a lot. Okay, I know that you see from here, from this period, he is about 305, and he is about 298, 299, somewhere like that. So it's not as a huge jump in a huge down reduction of like 365 to all the way to 340. So it's a big gap, big price reduction, about $15,000 reduction here. But almost all of that is because the seller putting too high, asking too much for their house as they got onto the market. Okay, not on the actual sale price yet, right? So that answers your question about why do you see a lot of price reduction on the market? Okay, so it's been a while since last time we talked about buyers and seller waiting for a couple of 1 or 2 more months so that we can see how the market is. And now we are at the point that we can see a little bit more clearer the pictures of what's going on with the real estate market right now. So I do have a couple of advice for recommendation for investor, buyer, and seller in this market right now. For investor, this is actually the best time to negotiate for your best deal. Okay, I know that investor, you really want to negotiate because buying all kind of investor, they want to buy at a lower price and then get a better so that you can get a better return on investment, right? So this is actually the best time to negotiate. You know what? Why? Because there are more houses on the market for you to choose from, right? And the seller, if whoever want to put their house, they want to sell, and they are more willing to negotiate. I'm not saying that they're going to accept 100% all the requests that you have on the contract, right? I'm not saying that you can negotiate a $400,000 house to like 2 or 100, right? I'm not saying that, but the seller is more open to your suggestion, to your offer, right? This is the best time to negotiate. Investor, especially if you even want a better deal, looking at the long day, like whatever the listing that has a long day on the market, right? Those probably the one that are overpriced, first of all, and then secondly, other buyers do not look at that. Right? If it is, for example, right, if the market values for that house is only 400, okay. However, if the listing agent put at 430, okay, the search criteria of the buyer agent would not show that property, right? Would not show that property, and therefore it's gonna last at the longer time on the market. So if you want a better deal, even in a better negotiation terms, take a look at the long stay on market. And last but not least, the tenant in place. Those property that has tenant in place is prime for you right now because regular buyer we are talking about has less number of buyers on the market already, but regular buyer, they cannot buy a property with a tenant in place, especially if the lease does not end until October next year or May next year, right? And if it's end within 1 or 2 months, then the regular buyer can do that. But if it ends longer than that, then it is really good for you to look at. Okay. For the buyer, also best time to negotiate. Now, best time to negotiate because of the same situation that I talk about with the investor. However, though, do not overconfident about pricing just yet for the same reason. The seller knows that the market and the listing agent know that the market is changing and then they're losing the negotiation power, that the market value is still reasonably high, the same compared to 3 or 4 months ago. It's only the asking price that whoever put above the market value has to be reduced. So do not overconfident about the pricing, because if you don't get it, some other people may take advantage of that and then put in a better offer for you. All right. There is some creative way. I know that one of the most concerned about right now is interest rate is so high. There is some option that you can lower your interest rate. You can buy points. You can ask the seller for those number seller concession, they're willing to. Hey, by the way, if you buy a brand new build, okay, right now a lot of builder very generous in terms of buying the interest rate for you. Some builder even offer the 3% closing cost and 3% toward the interest rate buy down. So take a look at those options, and it could navigate your concern about the interest rate. Okay. Last but not least, for the seller, pricing is key. Pricing is number one requirement right now, because if you too confident like 2 or 3 months ago and you put a very high asking price, you're going to be sitting on the market forever. Okay, because right now there are more options for the buyers to choose from. And if your listing, your house is not a hidden gem, right, a hidden diamond, then they're not going to look at if the price is too high, right? So pricing is key. But to make sure that you do an extensive search, do not just rely on public information like Zillow, Realtor.com and say this is the value of your house. They do not know what happened to the real estate market locally. Because they one big company, they have one algorithm to calculate the home value for all the houses across the country. So their variance is very big, very broad. Right? So look at the pricing suggested by a local real estate agent or a local appraiser. You're going to have a better idea of how much the price is going to cost. Okay? Look at other options to give you cash. Right? For example, you can refinance. If you are only in the situation that you don't have to sell, you just want some cash out in your bank, right? To be safe, you want to buy gold, you want to buy stock, although I don't recommend that right now. But look at other options to give you cash if you don't have to get rid of the property. Refinance, you can get cash out. Yeah, so those are the options that you can do, okay? Be more flexible, because a lot of buyers gonna use this time to negotiate with you. So don't feel bad if you missed the boat of 2 or 3 months ago, where you can be a king, you can be a queen of negotiation. All the buyers have to listen to your terms. Be more flexible at this time, because the buyer is going to put in a negotiation request, put in this inspection to be prepared, reduce the price, reduce the offering price. So be more flexible, navigate the situation with your real estate agents, have an advisor with you so that you can find out what is the best route for you. Okay, so those are all the information that I want to share with you in this video. Thank you so much for everyone for listening to me. Again, in summary, even though the market is cooling down right now, we are not in such a big mess yet, right? Not in such a big mess yet. Although even if we meet the condition of crossing the line when we talk about supply and demand, it's still going to take a couple of years for the price to start going down, given that the same condition of the market is keep for that period of years, right? That period of time. If not that happening, if the market change, if the condition change, the market will change again. Okay. Last but not least, we're talking about some advice. If you are looking at those again, we can review the video and have all the information. All right. Let me know if you have any question for me. My cell phone number is here, 602-515-2442. I'm looking forward to talk with you, and thank you so much, everyone, for listening.